Unfortunately, the financial system is irreparably broken, and that's why we have to have a full global, well, it's even bigger than the financial system, but certainly a financial reset as well as economic, as well as social. So we are at the end of this experiment. I'm sorry to say, but it's true. I would say that it's the beginning of a new gold rush. And, when you're talking about what's happening at the Bank of England sold off most of their gold in the 70s. And so what they're really holding as far as storing gold are other countries' gold that they have been shipping over here to the U.S. Because here in the U.S., our markets are primarily just contracts. They're not a physical market. And in Europe, that is a much more physical market. And so the Bank of England, this has me very concerned in some ways, and in other ways, it's extraordinarily telling. But where it used to be just fine for traders to just generate a little bit of income from their contracts on gold and silver, there are some big people in this space that are what's called standing for delivery. So that means from these contracts, they want to get the gold and the silver in their possession. Because the reality is, if you don't hold it, you don't own it. But the problem that I see coming is, since the Bank of England is holding this gold for other governments, and then they're shipping it to the U.S. and then it's getting delivered out, what happens if these governments request their gold back? I could see a huge problem with that. If the banks want their gold back and the Bank of England cannot deliver it back, then that means that they have to go out into the market to find it, make sure that it's in good delivery form, because it's a little different in the U.S., it's a little different in Europe, and that will drive the prices substantially higher than what we're seeing now, because we will see a lot of these paper markets default, or what's called a force majeure, and which happened in 2020 as well, where they paid the contracts in paper, so in dollars, versus in physical. But this is much, much larger, and a lot of time has gone by. And, to your earlier point, we are seeing global central banks accumulate gold at the highest level since they began recording what the central banks are accumulating. That gold is not coming back on the market easily unless it's being loaned out, and that just creates a squeeze. So this is the beginning of a gold rush. I'm very happy to see that it's trickling down to the retail public and even the younger retail public. And this is actually happening all over the world. And that gives me, frankly, a lot of hope, because what I'm trying to do is actually create a global movement to get sound money, physical gold particularly, back in the global monetary system again. For me, it must be convertible. In other words, if you didn't like $10 gold certificate, if you didn't like what the government was doing, you could walk into the bank with this and walk out with this. And that's what gave the public the power over the politicians, because that created fiscal responsibility and it limited their power to grow debt. Well, we haven't been on that system since 1971, and really we started the transition in 1913. But we are at the very end of this experiment. And so, I see a modern day gold rush, and the countries that do not hold gold will be in a much worse position than those that do hold gold. It is a power that's shifting. I don't know that they've quite fully lost control, or we would see a much larger spike, but I do feel that they are definitely losing control. And one of the things that I want to point out on the COMEX is that they are making smaller and smaller and 1 ounce contracts now on gold to get the normal public more involved to try and keep their game propped up. So that also is an indication of them losing control in trying to create a bigger market than they were once servicing, because that's just not there. So every Ponzi scheme always has to get new money in it to keep it going. And that's absolutely 100% what I see. They've used the paper gold market to suppress the visible price and hide the true value of an ounce of gold. It's much bigger than this now, but back in 2009, the central banks were not really heavily in the derivative market. And derivatives simply just a big bet. And you can't really convert it into the underlying when you make this bet. So in 2009, the Bank for International Settlements tracks derivatives. And it was before they changed their accounting. And so I didn't know print screen at that time, sorry to say, but I saw with my own eyes and calculated it out that for every 1 ounce of physical gold that exists in the world, there were 62,000 ounces of digital gold that will not ever exist on the planet. But the markets read it as if there were 62,000 ounces for every 1 ounce. And that was 2009. And subsequently, that derivatives market has grown and grown. So I couldn't even begin to tell you, because it's not like they really keep things like easy for you to see. They change formulas to hide the truth. And I think actually, even since we're talking about the derivative market, that's really what's going to topple this whole global system. And it's not just against precious metals. That could suppress the price until it can't. So it goes back to what we were talking about earlier in the physical markets. Now people are standing for delivery and there's just not going to be any liquidity in there. And that means that the visible prices that you see will be more honest, because I don't really think we're going to see gold go to its true fundamental value until the governments and the central banks need it to attempt to get the public confidence back, because this whole big thing is a big Ponzi scheme. Number one, this is how they have to deal with the debt, meaning this is how governments have to deal with this unpayable debt that they've grown. Nothing grows to the sky, but we need to be as independent and self-sufficient as possible as we're going through this, which is one of the reasons why community has become pretty much my top thing. But what you need to sustain a reasonable standard of living, no matter what's happening: food, water, energy, security, barterability, wealth preservation, community, and shelter. And the reason why community has grown in importance so much to me is, number one, I was 100% crystal clear in 2008 that the system had died. And I know that food becomes the single biggest issue for most people during this period of time. So, I may or may not look like a farmer to you, but I was living in a little 2-bedroom condo, kind of getting ready to retire, lock the door, off I go. And 2008 happened, which I did not think I would see in my lifetime. And I was a stockbroker at Shearson, so that's my alma mater. So I was really paying close attention to what was happening. And that's when I, instead of retiring, I bought a piece of property in dead central Phoenix. So I am in the middle of a city. And that's when I started becoming an urban farmer. And so, that barterability piece, one of the things that I want people to really know is that any talent that you have, anything physical that you have, is barterable. But most importantly, gold and silver at its base is always monetary. So it doesn't matter what form it's in. It can go into another form. It can stay in that form. But this is what I prefer for my barter. Although we've been sharing a lot of eggs, because you may have heard in the US, eggs have got ridiculous. I've been studying currency life cycles since 1987. And when you do that, you've got such a huge amount of data, and what you see are patterns. And one of the patterns is they need things to appear as normal as possible to get people to just flow into the new system. So I do not think it's an accident that Bitcoin came out in January of 2009 and quantitative easing, money for free, came out in March of 2009. In my opinion, I believe that Bitcoin is like a Trojan horse. to get adoption, to get people comfortable. And it should certainly be obvious that Wall Street has built out this whole ecosystem for cryptocurrencies. And further than that, I know that what the governments are wanting is a full surveillance currency. I mean, this currency gave the public their power because, again, you could pull it out if you didn't like what the governments were doing. Well, they took that away from us. This preserves your principal because this is actually a debt instrument that at this point does not charge or pay interest. So you still have privacy here if you're holding cash and you're transacting with cash. In a cryptocurrency, what you have is no privacy, full surveillance, and governments can dictate if they don't like how you think about something. Boom, you're cut off. We saw that in Canada with the very legal trucker strike where they cut all of those people off from accessing any of their wealth and even cut off people that might have donated $5 to them. That's the direction that they want to go in because it gives them a whole lot more control, the ability to do lifetime taxes. And boy, they can just withdraw those taxes from your account whenever you want. For central banks, what they say, we can have our finger on the economic button 24/7, and then there are no limitations to how low they can push interest rates. They're talking about negative interest rates, which erodes your principal because, quite frankly, you can see this in the Fed, purchasing power of the consumer dollar. Well, we're marching towards zero. So when they've inflated all the purchasing power away, hence this $10 trillion Zimbabwe note, that's what that is. Well, then what do? You have to attack your principal. So I do see a place for cryptocurrencies. I mean, we are going into the digital age, but that makes it even more important to hold sound money completely outside of the system, because you can always make a deposit, but as we've seen many times, you cannot always make a withdrawal. Real estate, which now we're one of the things that our central bank, and most of them have, look at China as well, targeted for reflation, right? Because it's such a huge part of their GDP. However, that also means that it is severely overvalued. If you are buying it for speculation, I would say run, don't walk. Because as we saw during 2020, people didn't have to pay their rent. At least here in the US, there was rent forgiveness for a rather long period of time. But if you owned the property, you still had to pay your taxes, you still had to pay your insurance, you still had to pay your maintenance. So you had costs. So I would not be speculating on real estate. Having said that, you absolutely do need a place to live and create that security in all those other areas of the mantra. And part of the challenge here in the US, we do have it very fortunate in that we can lock in a 30-year fixed rate mortgage. So that's beneficial because you simply buy enough gold at its fundamental value to pay off that mortgage. I've been asked many times by people in different parts of the world where they might only be able to lock in that mortgage for 3 to 5 years, maybe in some cases 10 years, but not a lot, right? So it's almost a moving target. Having said that, you can still execute a similar strategy by having enough gold so that when they do that overnight revaluation, like in Venezuela, the first one they did, spot gold went up about 3,500%. So what might take you 10 ounces of gold right now to pay off might only take you a quarter of an ounce. So you can repay that debt with dollars that have no value, which is exactly the same strategy that governments use on government debt. Further than that, you want to pay attention. I don't know how it is by you with property taxes, but governments and central banks consider property immovable because you can't put it on your back and walk away. So you have have to always be able to pay those property taxes. And frankly, that's what I like the fractional gold coins for. You want to maintain your ability to always pay those taxes, or else you could even have the property paid off and you could still lose it if you didn't. So there are strategies around that if you are an investor and you're generating income from that. And like I said, we will most likely in hyperinflation, governments are going to cap what you're able to charge, but your prices that you're going to have to pay are not. So there are strategies around that as well, using primarily raw gold to help you weather that storm and keep what you've already accumulated, or put you in a position to buy it when it's at a bargain because it's going to flip-flop. And so that's why I said 25 ounces of gold buys an entire city blocks on average. It's varied, but it's an opportunity because you're buying something or converting your worthless this garbage into sound money that holds its purchasing power value. And there is so much leverage. There is so much debt, particularly in the US, but also elsewhere in the world. You know, it works great on the way up, but it works so bad on the way down. And we are on the way down. That debt bubble has already popped.